Just Dial earnings, Ramkumar Krishnamachari joins us on the show. Mr. Ramkumar, hi, morning. Your top line saw a steady sequential growth. What were the key factors supporting this and what was the contribution from the paid campaigns?
We've had a pretty good quarter in terms of revenue and other financial metric, EBITDA margin growth, etc. On the revenue side, we have seen a 28% year-on-year growth on paid campaign. So what we have done this quarter is that, in the first two quarters, we experimented with the evergreen contract of having a zero down payment. And this quarter, we completely stopped the zero down payment and are going to one down payment or two down payment or more than three down payment for all these evergreen contract. So what we are seeing is quality sign up, people who are serious and people who are looking at our platform as a serious advertising medium, and that has seen some good traction and results. Overall, number of things that we have done that has increased the sales productivity in this quarter, and it's a combination of many things that we have done during this quarter, and we continue to do, including expanding the sales force that has contributed, and we expect to that will continue to contribute in the subsequent quarters as well. As far as the listing is concerned, the overall listing, if you see, grew to about almost 10.8 million. And we are seeing, as I mentioned, 2.4% is the paid campaign percentage, but our aim is to increase this going forward, and that will be achieved with a combination of increasing sales force and creating awareness among the SME community of a platform like ours for quality lead generation for them. So many things that we are doing in the business. We are investing in augmenting the sales force, especially the feet on street. We are investing in augmenting the technology resources. So there are many things which are going in parallel. Plus, we do have leverages within the business where we can expand the margins, etc. So overall, we feel quite confident going forward.
Ram, your EBITDA margins, even though they've expanded on a year-on-year basis, which is why sequentially they've declined, and they've declined by about 3.5% for 2 consecutive quarters on a row.
This quarter, we spent a bit on advertising, which is as per plan. We had projected, and we have said, traditionally, even if you look at last year, we spent on advertising in Q2 and Q3. And this year, we have spent bulk of advertising expense in Q3. And that is what has caused the margin to dip on a sequential quarter basis. This is in line with our strategy of, spending in the right areas. I would put it this way. This year, we had taken a very cautious view of spending in the advertising per se. We are investing in the field force and sales force, as I mentioned earlier, investing in technology. So, fortunately for us, we are a business which is not whole hog dependent on the advertising medium to either generate the large number of user traffic or the SME or the revenue SME sign up. So from our perspective, we have the leverage of spending according to the needs as appropriate.
Right. But your top 2 metros, that is Delhi and Mumbai, contribute nearly about 34% of the paid subscribers and 43% of the overall revenues for you all. What's the traction you're seeing across tier 2 and tier 3 cities?
So let me put it this way: the growth rate in the smaller tier 2, tier 3 cities and smaller of those top 11 cities have been quite high. They are growing at a very high percentage. We are seeing penetration happening in those areas, increasing number of sign-up. Yes, the ticket size for these smaller cities are small, but then we have a highly leveraged operation there, where we don't have fixed offices, etc. Our overheads are lower there as well. So you will see a good amount of margin flowing through from there. May not be as high as these other cities, as you rightly mentioned, but then we play a volume game there, and as the penetration increases, so will the contribution to the bottom line and the EBITDA margins. EBITDA. And as far as the Delhi and Mumbai contribution is concerned, we are seeing both Delhi and Mumbai today contribute around 43% right now, and in terms of campaigns they would be about 34%. So we have seen that with the increasing growth rates in the smaller cities and the Tier 2, Tier 3 cities, despite the growth in both Mumbai and Delhi market, their contribution is marginally coming down.
Ram, Just Dial has launched the Search Plus services in the quarter, which you've outlined will be a key focus area. While this clearly expands service depth and builds customer base, give us a peek into the monetization of some of these new launches.
Our focus is on the user, and if you look at the many things that a user does on a day-to-day basis, our belief is that when a user comes to our platform, not only will he be able to search but also transact on it, which is why we are doing the many things. Even now, today recently we launched even a car pickup, AC repair service, AC repair appointment, scheduling. So there are many things that we are doing that typically keeping the user in mind, that whatever he does on a day-to-day basis, we will be there to provide him with a seamless search and transaction experience. And in the process of doing this, for many of the some of the products, not only will, for example, in the shop front, not only will you be able to discover the best price, but also get it, say, in a span of say 4 hours to 6 hours, or even sometimes an hour delivery. For example, in flour, you can have it delivered within an hour. So and also provide, for example, in the shop front, the convenience of sitting in your drawing room and ordering many of the branded goods.
Okay, fair point, Mr. Ramkumar. We'll leave it at that. That's Just Dial's management talking about the earnings. Let's see what the stock price is up to. While the Nifty is just about skirting around this, the 6150 mark in trade. The Sensex holding up by about 43 points. Just Dial, and you're seeing a lot of fizz come off from this stock. It's now lower by about almost 6%. You also have to mark the kind of run up the stock has seen in the past month, and of course, some reaction post the earnings too. What's looking good? We've talked about the banking pact.